Shares in defense stocks higher today. Look at that. RTX, Northrop, Lockheed Martin, all up. The latter two almost 10%. U.S. President Donald Trump is calling for a military budget of $1.5 trillion U.S. in 2027. Reuters says the budget approved for this year is only about $900 billion. So that would be an enormous increase. We're joined by David Sekera, U.S. Chief Market Strategist at Morningstar. David, great to see you. Thanks very much. I mean,
good morning.
I mean, this could be just a number the president has plucked out of the air. I mean, that would be an enormous increase.
Exactly. You know, love him or hate him, you got to say there's just never a dull day when you've got President Trump, in office. But I think we need to put, the defense stocks in a little bit of context, this morning. So first of all, they actually sold off, several percent yesterday. That was on the back of President Trump making some commentary that he wanted to see those companies, halt their stock buybacks, reduce their dividends, really reduce executive pay. He wanted the companies to spend a lot more of their money on, growth capital expenditures. From our perspective, I think that's just a lot of rhetoric. I'm not sure necessarily how he could really implement that. So there was no change to our long-term intrinsic valuations. And of course, today we've got all of these stocks now surging based on the talk of that increased, defense spending. So I'd just say with President Trump, you also just have to take this with, not just a grain of salt, but a mountain of salt. Mm-hmm. He always starts off with, the most, extreme position, that he can take. And then from there, he seems to always negotiate down. But either way, it certainly provides a lot of positive market sentiment and definitely a catalyst to increase valuations today. I just note that here at Morningstar, we've been very constructive on defense stocks, for quite a while.
Lockheed and Northrop are two stocks that you have a buy on.
Exactly. So on the Morning Filter, which is my weekly podcast, first one that we had highlighted was actually over a year and a half ago was Huntington Ingalls. It's a manufacturer for nuclear submarines. That stock has done very well since then. That's another one that I still think investors should take a look at today. It's often overlooked by the marketplace. Doesn't have the same name brand as a Lockheed Martin or a Northrop. With the movements today, it's taking those stocks up pretty close to what our long-term fair value, intrinsic valuations are on both of those. I'd say with Lockheed, I would expect the U.S. government probably start ramping up, the time frame for deliveries of F-35. So that's going to be, another good tailwind for that stock for at least a couple years, yet to come. And then with Northrop, similarly, I would expect that we're looking for them to take deliveries of B-21 bombers. Originally, we were looking for them to take delivery of 100 of those between 2026 and 2028. So I'd look for a pickup there as well. And for all the manufacturers, especially someone like Northrop that has a lot of the business in space defense systems, I expect a lot of money to go there. And then another one to throw at you, I just got off the phone with our European strategist. The one that he would recommend, and I'm probably going to mispronounce the name here, it's Rheinmetall or Rheinmetall.
Yeah. Right.
It's a 4-star rated stock. Last I saw, it's trading at an 18% discount to fair value. It's a company we rate with long-term, competitive advantages, a wide economic moat. They're the largest defense contractor in Europe. And our base case right now also calls for Germany's defense spending to reach 3.5% of GDP by 2029. So it's not just the U.S., increasing, spending on defense here as well. I mean, we're seeing it globally, seeing it in Europe. We had noted on the Morning Filter, last year with our Trump trade stock picks, in the spring of last year, a lot of companies in the Middle East, like Saudi Arabia, had negotiated a couple of deals there. So just, a huge increase in spending, globally, not just the U.S.
That's interesting with that Huntington Ingalls, apparently America's biggest military shipbuilder.
Exactly. And in fact, they also just got a new contract from the Department of Defense to start building some new frigates. We included that in our fair value, relatively recently as well. But I think that also just shows, the positive sentiment that the DoD has, for that company. So I expect to see more contract wins coming from them as well.
I have to ask you, you said it's the Morning Psalter. A psalter would traditionally be a book of poems, of poems, yeah. I don't know, now I'm losing it, but Psalter, is that what it is?
No, I think it's just me. I'm not being very clear with my enunciation. So my weekly podcast is called The Morning Filter.
Oh,
so
sorry.
Filter. So it's like, join me in the morning, have a cup of coffee with me. It's Monday mornings. We always talk about what's coming up on the week ahead. I'll highlight, some of the Morningstar research that was published the past week that we think investors shouldn't miss. And then I always wrap things up with a couple of, picks, pans, swap ideas, but, something that's action oriented for investors.
Sorry, yeah. Traditionally, the Salter would be a volume containing the Book of Palms. Okay, let's move on from that one. We have another couple of stocks. Obviously, NVIDIA is always on our radar. Just give us your quick thought on NVIDIA, please.
We still think NVIDIA is undervalued today, but I think at this point you really need to see what the AI CapEx guidance is going to be, coming out later this month from the hyperscalers. At this point, the market is, we have very high valuations on AI stocks, overall. A lot of them, like in NVIDIA, still are undervalued today, but I think we're going to need some positive market sentiment really to start the next leg up, in some of these stocks. The market's already pricing in increases by the hyperscalers in their 2026 AI CapEx spending. So at this point, we're waiting to see what those numbers come out end of January, beginning of February. And based on that, we'll see what the market sentiment is. We suspect those numbers will be pretty positive. So we're still looking, for further upside ahead. Having said that, it's one of the indicators that I'm looking at that I think we're going to see even more volatility in the U.S. markets this year than we saw last year. Last year we had the big bout of volatility, starting with the DeepSeek when that hit the headlines in January. We had, of course, the Trump, Liberation Day, tariffs, which pushed the market down, even further. But then by April 7th, the market had fallen enough. That was the point we moved, from a market weight to an overweight recommendation in equity markets. So again, I suspect between all of the risks that are out there that we're looking at today, I think there's a lot more volatility yet to come in 2026.
Thank you very much, David. Always fun talking to you, and have a great 2026. Yeah, I just had a brain glitch there. Of course, it's Psalms. That's how it's pronounced, the religious chants. David Sekera joined us there, U.S. Chief Market Strategist at Morningstar.